no one wants to touch it, and then it will start going up, and people will be a bit sceptical, then it'll go a bit further, and it's just when people start to realise, and usually it can go a long way. What I want people to get a sense of is this channel, which is of a market that is rising.
Now, we're going back to 2009 low?
2009 low, so we're going 15 years. So this was the COVID crash, you can see there.
Belvedere, ring the cowbell. Hello and welcome to this week's closing bell video. What a big week it has been in the markets. Now, I'm here with the Sultan of Swing, Murray Dawes, who's called this market to a T in the last couple of weeks, so I don't know if you can keep it going.
Probably not.
Well, we're going to talk about three things in today's video. One is Murray's latest analysis of the market. It is coming under a lot of pressure, very sharp sell-off we're seeing, so we'll get Murray's guidance on where that could go. Then we're going to talk a little bit about some trades that have been working lately and a couple that have been mentioned here on the closing bell that are doing really well. And then we're going to finish with a new segment that I'm starting. So I'm teeing off some of the footy shows because we're in Melbourne that go around. They have the Saturday rub and the Friday hustle and the Sunday swill and all this sort of stuff. So we're going to start the Ring My Bell section. So Muzz is going to tell us something that he's excited about. So stay tuned for that. But to begin, Muzz, show us the ASX 200. What's going on there and where might we be going from here?
Yeah, well, I mean, we're definitely seeing a nice washout at the moment, and whether it's going to now just completely collapse or do what it usually does, which is get everyone bearish and short and then spend 2 months going up, the opposite of what everyone thinks it's going to do, and then it'll have the big sell-off then. So that's sort of how I'm looking at things. So I don't think at this moment is where you make big calls. I was made the calls a couple of months ago saying that this is a high risk of getting hammered. And now we've had that move, but now things are poised pretty much above a really key level. So that's what I want to go into. I would expect it would hold at this level first up, but if it doesn't, it is actually sort of scary for a really big sharp move down if that level can't hold. But then really big picture, that's what I'll show you in the chart, is that then becomes a possible great buying opportunity. So I want to just set out, really get that bird's eye view. Let's have a look at what's happening. Don't sort of get too caught up in this current short sell-off. Actually look at it in the context of 15 years.
Okay.
So that we can get a sense.
So what are we down now? About 9% for the Aussie market?
Yep. Yeah, it's been a nice hammering. But, let's look at it in the context of 15 years. So this is where I want people to see. You can really see it quite clearly when I've done a regression analysis. So I don't look at trend lines or things like that. I look at a regression analysis over time, which is looking at a line of best fit. I think that's the best way to see a channel. What I want people to get a sense of is this channel, which is of a market that is rising, but
now we're going back to 2009 low?
2009 low, so we're going 15 years. So this was the COVID crash, you can see there. Then that obviously went outside the channel, then it went back to the channel. And so the sense I want to get is when that market's at the top of the channel, top of the blue area, that's where you're saying, well, watch out, be careful. Now look in the red area, when the market's got hammered and turns back up, if you were asking someone, looking at that chart over the past 15 years, when would you have wanted to be a buyer? It's when the market turns up after getting hammered, right, from those lows. And it's time and time again. We can see there, if you were a buyer in those times, just before the big rally, that's when you make your money in the stock market, right? And usually what happens is everyone's nice and bullish up here, they buy, and then they're a seller here. People get bullish up here after rallying for 2 years, then they're dumping it down here. So amateur investors are pretty much always doing the wrong thing, and the professionals are doing the opposite. So this is where I want to come to where we're at now, and you can see prices had a good rally over the last year. And look, I joined this rally, but I wasn't really a big, strong participant of it. I was sort of a bit skeptical of it. And so I feel like I haven't got a huge amount on, although we haven't had a losing trade for a year and a half or something. So we've gone really well. in Retirement Trader, but I'm actually excited about this sell-off because I think it's going to set up conditions down the track that'll be ready for that next bull market. So we've seen a rally that's taken it outside the channel, you can see there, and this is where, if I come up close, you get that sense that we're now plummeting back into the channel. So this is where I'm sort of saying, look, this thing can go further. It can fall further. There's no doubt about that. But you really want people to look at this as a potential opportunity for later in the year, let's say. So this is where I'm looking at the range we've been in just really quickly. I'm going to describe this more next week for people because I think it is really interesting. We saw that correction over the last few years, and I'm then looking at that correction, and the top of that correction is where I say watch out if it falls back below that level, because you've had and when it breaks out, amateur people are saying buy, 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 right? And now we're finding out, oh, that may not be correct. We're getting hammered. If it fails back below that high from 2021, which is around 7,600, below there is saying, oops, this whole move was incorrect, and it's now returning to the range, which means it can sell off quite rapidly once it does that. It's like the false break. That's what the false break is. Everyone gets long and bullish, then it turns down, everyone goes, oh, it actually didn't break out at all, and then everyone dumps it really rapidly. So this is where I'm saying not much lower than here is a really key technical level. Below there, you could expect the market to get absolutely drilled, but this is where looking at that 15-year time horizon, and this is something I've done in Retirement Trader over and over again. This is will be the fourth time I'm looking to take advantage of this fact. I want you to look at the indicator down the bottom there, looking at a monthly chart here. Now just see with this indicator, when that blue line goes above the black line, saying as the bullish momentum shift, you can see it there, So I'm just pointing out for you, every time that momentum indicator has turned bullish, that's when you're a buyer. Look at that. Look at that. And again, and this is when I started Retirement Trader. We bought this one, rode that rally. We bought this one after the COVID crash, rode that rally. This is where we made nearly 100%.
That was a big one.
We made nearly 100% in a year for people, which absolutely killed it. And then just in the last year, we got another one, and we rode this one higher. And this is where I haven't had a losing trade for the last year. So what I'm saying is the momentum indicator is turning down right now. So just get ready for the same thing to happen again. A move back to the bottom of the range, then wait for the buy signal. So this sell-off, in line with 15 years data, clear as a bell, perfect channel. It's worked over and over and over again, and I think we're going to get another one of those before long. And look, these sort of things can move so fast that it could happen in 2 weeks, but it could happen in a few months as well. Just
as you're talking there, I was reminded. Remember we did the night of the fat tailers in around November 2023, and I remember the market was down in the dumps. Then it had been going down for 2 months, almost all negative. That was a low for the market, and the point I was going to make is when the market shifted up, it wasn't obvious that it was going to rip up the way that it did. Like there was nothing you could really point to and go, "There's a massive rally coming." So, as you say, these things can turn really fast, and when it happens, it's not going to be obvious. Yeah.
No, it's never. No, it's always after it's been hammered. No one wants to touch it, and then it will start going up, and people will be a bit skeptical. Then it'll go a bit further, and it's just when people start to realise, and usually it can go a long way, and it's just climbing a wall of worry on the way back up, and then people go, oh, now I'm bullish once it's really
feels
obvious, and then it's probably ready to fall over again. I mean, this is why everyone constantly gets wrong-footed.
Well, that's the general market, but we should say there's always opportunity. And like the humdinger in the last year or so has been the gold sector, so there's been some fantastic ones there. I want to show one of my little trades that the algo picked up last year, which is Catalyst Metals.
Oh, yeah. No, that was a killer.
To give you an example, so even though the Aussie market all the markets are getting bashed around a little bit, but the gold sector is absolutely firing at the moment. All the 52-week new highs are pretty much gold even today. And for very good reasons, in the fact that gold is still going up. These guys are making great margins. And now we've got the oil price, as Murray sort of forecasts for some time, really collapsing, which is a great help to the gold miners because a lot of their costs are to do with diesel and what have you. So is that Catalyst there?
Yep, sure
is that their monthly?
That is their monthly, yep.
Now, that's a decent monthly chart there if you've ever seen one. That's almost completely vertical there. So that, just to give you an idea of even within the dynamic of a not overly bullish market, you can get some ripping trades. And you're on Regis, which is ripped up. What are some of the other ones?
Perseus, De Grey, I'll have to look at my...
I have to bring up your portfolio. But the point is that the gold sector is absolutely booming at the moment. Now, you told us about a little goldie last week here at the closing bell, right?
Yeah, look at that. Look how that's moved. Up 30% in a week. So hopefully some of you managed to jump on that one. I think I did see the volume pick up on the Monday. It traded from 26 cents to 28 cents on pretty good volume. And I had a feeling that might have been a few closing bell people having a crack. And today it's at 34.5 cents. So,
well, I was chatting to Greg Canavan this morning and about the small cap systems that I run with the algo, and I made the point that, again, even though the market is weak at the moment, individual stocks march to their own drum. And another example from the closing bell, which we talked about, I think it was last week, which is Metals X, which is a tin miner. Now that has exploded this morning. It was up 21% at one point. It may have settled down a little bit as we're doing this. But that's because, and you charted that one and said it ticked all the boxes for the guys on the closing bell, because of a tin disruption in Africa where they've actually shut down one of the mines because it's in the Congo and there's militia around, and that's 4% of global tin supply. So tin surged in London overnight. Is that Metal X there?
No, this is Rocks.
That's Rocks.
I just wanted to show people from 1 week ago. It was trading around 24, 25, opened at 26 cents on the Monday. So that was closing bell saying that this one looked like a buy. And here it is 35 cents now.
And we should say the market is
26
until
cents.
today was down all week, right?
Yeah. So that's now over 30%, 35% in 1 week, which is not bad for watching closing bell.
Show Metal X, because we want to see that explosion too. So, but the point being that there is always opportunities in the markets, because the interesting thing actually about the moment, I alluded to this in Fat Sales Daily, is copper and tin, some of these things that you would expect if we're going into recession, as some people suspect they might be, you would expect them to be going down, but they're not. Copper, for one, is the strangest anomaly in the market right now, that so much is going down, but copper isn't, and that's looking very prospective for copper miners. So is that Metal X there?
That is Metal X on a weekly chart.
So that's
flying
broken
higher
out into 52-week highs there on massive volume today. So that's another idea we tabled here at closing bell, and that came from the algo there, that one, so earlier in the year for us. So that's been a winner. So a couple of good ideas there. Now we're going to talk about what might be Murray's next exciting ideas. It's going to be my Ring My Bell section.
Ding-a-ling-ling.
Ring the bell. So, Murray, ring my bell. What should we be excited about?
Well, it's something I've been banging on about for the last few weeks, saying that silver was on the edge of a blast off towards $40. That is my view, if it can get above 35. Last night, it got through $34, which was the last sort of a short-term peak recently. And like in the undercurrent of the silver market, there is a bit of dislocation going on. The leasing rates for 1 week or for silver is up around 10%. So there's difficulty in getting physical silver at the moment. So there's definitely something going on underneath the surface there.
Do you pay any attention to the gold-silver ratio? I mean, is that reliable in any way? I can't remember. Is it 15 to 1?
I used to think, no, nowhere near that at the moment.
No, but that was the old ratio, wasn't it, or something?
No, that's the amount of silver there is in the earth compared to the amount of gold in the earth.
Right, okay.
It's about 17 times as much. But the ratio is nowhere near that, and people have always referred to that as somehow something,
some barometer of
that it will gravitate back to, but it never has. but once it does, everyone who said that will say, see, I'm right.
Yeah.
10 years later.
Absolutely.
Yeah, but if I just bring up the silver chart again, just to go through, finish off.
The other interesting thing about silver is that, as I understand it, from a mining perspective, it's usually a byproduct of something else, so which gives it a funny sort of supply profile, because, for example, if copper was down in the dumps, then the silver supply can get affected because suddenly they're not producing and that type of thing. Anyway, there's silver. So what's that low 2015 in silver?
Okay, so we're going to look at the really big picture for silver, because silver went and did a crazy run to $50 years ago, and all of the price action.
I remember that was around 2011, 2012, right?
Yeah. So
that was the peak of the last commodity cycle, actually.
That's it. So this is where I'm want to build the picture for people of why I think silver can really blast off, because there's really very big picture technical sort of things going on, I guess, to understand rather than just looking at the short term. So we've got that massive run which happened back in 08 to 2011.
And we should say it lives in this hybrid world of being an industrial metal, but also a precious metal. So it kind of has the two demand pools on it.
Exactly. And there's rising demand for the things, solar panels and this and that and whatever. So we had that massive run and then the collapse, of course. And you can see the buy zone of that whole wave. This is where it went into a multi-year range trading in that buy zone. And then noticing, again, the midpoint, which is the point of control, very important point. So that's around $30 in silver. And you can notice the prices initially rallying out of that buy zone straight to the point of control, right? So hit the point of control there, and then it failed, couldn't do it. So that's 21.22. So where did it go? Failed, went to retest the buy zone again, and it's taken off again. Now we've gone into long-term uptrend. We've hit the point of control, and it's been doing a bit of work for the last year. And on my theory, once it's broken through that point of control, it basically will rotate to the top of the range. Basically, the sell zone of the range becomes the target, and it can get there quite quickly. So
just as you're speaking there, that last spike that was about 10 years ago, I remember that period. The market was very bearish on the US dollar back then. That was when the US was perceived to be kind of broken by 2008. Gold was mooning at the time, and the narrative around that was the US dollar was toast and that precious metals were going to be very similar to today. So the kind of overall background dynamic, again, with the tariff situation and the isolation, the US dollar, the BRICS moving away, that kind of whole conversation is coming back. So the scene is, and with gold exploding, I mean, silver, it would, and the surprise would be if it didn't do it.
Yeah, so silver's been lagging behind, and we've just had, this is about a year now, where you can see it's held in around this $33 to $35 region. And this, I've just been watching it the last few months. I sent out an alert about 3 weeks ago or a month saying silver is about to explode. And it's just working towards that level of that $35 up through there. I'm just saying the scene is set the way this is trending at the moment. Very clear on the monthly. You can see the wave structure here that's moving higher and higher. So it's ready on one of these ones to just go bang.
And we should say, like, if the Mag 7 trade is like running out a bit of steam, I mean, maybe the speculative element of the market goes into silver or into other asset classes. I mean, we don't know, but we know that the Nasdaq's not really working for people right now. So
yeah, well, it's just
another
purely. It's one of those things. Yeah, gold is absolutely flying. I mean, why is silver lagging gold so much? It's almost the gap has gotten so great that there's going to be a catch up, and the fact that there is an undersupply of silver at the moment. They're actually working through stocks. It's going to take years to get rid of all the stocks, but they're actually, the last few years, global stocks of silver in the warehouses has been going down because they're not producing enough for demand. So it's actually a fundamental story there as well, and we're seeing the fact that leasing rates are very high for the short term at the moment, is that there's a difficulty getting physical silver. So there's a chance that the dislocation could take off and you could see it move from $35 to $40 in a matter of weeks or a month or two. So that's sort of how it's, and of course, set up for me.
That's the futures market, and the silver stocks will react even stronger usually because they get the leverage effect of the price on their earnings and what have you.
So ding, 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 Callum.
Ring the bell. You've rung my bell for the first ring my bell. Well done. I like that one, Buzz. So that's a good one. I'll be watching silver. So there you go. That's this week's closing bell. I think we can leave it there. It's been a good one.
So long enough.
If you liked it, give it a thumbs up or leave a comment. Don't forget, if you want Murray to ring your bell, you can leave a comment. Maybe we can get him to chart it next week. or in the following week. So we'll leave it there. We're going to close the show. It's a closing bell. We've got to close the week with a bell, so we can have a cowbell, a butler's bell, church bell. What sort of bell do you want to close the show with?
I have no idea, Callum. Cowbell?
Belvedere. Ring the cowbell, and we'll see you next week. Thank you very much.
That's a wrap.